I'm in London.
I don't think
I'm in Uganda right now.
Oh, really? I mean, and again, it's the life of an African founder, and I'm doing African founder because I'm hoping that we can talk about this because we're slightly all over the place, and if you want to do business in Africa, you have to be in Africa. But we live outside the continent. Anyway, good afternoon, everyone. My name is Joaquin V, and today I'm here for a session that we hosted earlier in the year, which is titled Investor Readiness, and it's in partnership with Africa Tech Summit. The whole idea is to essentially help founders and investors get ready as they go on that journey. And today we have two great people. Can somebody please? Yeah, so it's gonna be about an hour. We just started, so about 30 minutes of discussion, some questions, and then we have 5 minutes pitch. It's going to be a very hard stop at 5:30 because I also have a call right after, reason. But yes, and then we will have the pitches, and then we'll have ATS talk about what ATS is. I've had a lot of people reach out to me about ATS tickets, and sadly, folks, I can't give everybody a ticket. And then we'll talk about raise, and then we'll close it there. If I have to leave this call slightly earlier, I would really, ask for an apology in advance, but not to my guests because, I can't leave my guests like that. Next slide, please. Right, so this session is essentially how to raise from international investors as a diaspora founder. And the reason why I brought and Vanessa is because they kind of wear that hat, which is, it doesn't really fit one particular head. For example, I met Stone in Paris about 6 years ago when he just started building Eversend, and we've been talking for a while. We've done so many things together, and now Stone is based in the UK, but currently in Uganda taking this call. And then Vanessa, I think Vanessa and I met when she just moved to London from Norway, and she works for Cornerstone. But instead of me trying to introduce all of you, I will essentially give you the mic to introduce yourself. And then we will dive right into the session. Vanessa, my name, pass you the mic.
No, definitely. And thank you for having me. I'm really excited to be here with you and Stone, and to hear with also to chat with everyone else on the call. So my name is Vanessa, investor at Cornerstone. We are a pre-Series A fund. So, typically pre-seed, seed, kind of whatever you call it these days, but early is what we invest in, leaning more towards seed these days. The fund has been around since 2022, and we invested in around 25 companies, looking to invest in 35. So we're in full deployment mode, primarily companies that are kind of registered in the UK due to our LP base and so on. But I can say more about that separately. Myself, as you mentioned, moved from Norway, where I was working for an accelerator at the time, helping startups to get fundraising ready. So I know a little bit about kind of the struggles that occurs when in the early stages, trying to raise from angels and VCs, and use that experience to get into VC here in London, working first for another pre-seed fund called Concept Ventures, and then eventually started to work for Cornerstone. So I don't want to take too much time, but that's a snapshot about myself.
That's fantastic. Thank you so much, Vanessa. Stone, I'm going to give it over to you.
Yeah, thanks, Joe, and thanks, Vanessa, for coming through. Yeah, my name is Stone Atwine, and I'm the co-founder and CEO at Eversend. I'm based out of London, and like Joe mentioned, I was based out of Paris and Uganda before. At Eversend, we facilitate cross-border payments. We've been around for a bit of time now, maybe 6 years. 2019 is when we launched our application, and we've kind of expanded now into infrastructure, stablecoin-based infra, APIs, and B2B. But we have about 1.5 million users across Africa, and we've done a bit of fundraising as well previously. So this is going to be a very interesting conversation for me.
Amazing. Thank you so much, Stone. I'm just going to ask my team to take down the slides, and then we can essentially. Yeah, I can see the both of you now. I don't need to be pinned, but I can see the two of you. For those who don't know Stone but care about stablecoins, I think about a year ago we did a session with Stone on the HoaQ channel where we essentially broke down stablecoins, and Stone has been building his space for a while. So for folks who care about stablecoin, I recommend you go check out that video because I think it's pretty cool and it's still very relevant. And I think stablecoins are going to be relevant for a while, but I digress. I want to start with you. Let me go to my questions. So you've raised money, you've raised money from investors, like angels, accelerators. You did some crowdfunding. I wanted to ask, when we talk about investor readiness, what does it mean for a founder like you who is based in a diaspora, essentially raising in this very not so straightforward space? And Vanessa, I'll come back to you with the same question because you deploy capital to these type of founders, and I'd love for you to touch on the Cornerstone thesis. But Stone, when we talk about investor readiness, what does it mean to you, and how did you get ready for? I remember your first pre-seed, you raised $1 million. How did you get ready for this?
Yeah, I think clarity seems to be the one thing that is very, very difficult. We did struggle a lot with clarity. We were building, across multiple markets, different products, and people wonder if you are serious or you have a lack of focus because you're trying to do all these things. And for us, it made so much sense because we're just saying, one financial product, one Borderless, spend, save, invest. We really wanted to help our customers with their financial lives, but we had to start with a product, like an anchor product, and then build these things down the road. Yeah, but clarity, I think I find, is one of the biggest issues. So if the story is clear, if you can explain the company very, very simply, if someone who is not, in Cameroon or Nigeria or in Uganda, somebody who is sitting in London or in Silicon Valley can very easily understand that African context, I think that's one of the harder things. I remember finding it very, very difficult to pitch mobile money. In the older days, like people in Silicon Valley, they were like, what the hell are you talking about? And we ended up calling it, banking by SMS or things like that, but it has nothing to do with SMS. Yeah, so that's clarity, story readiness, numbers readiness, the usual stuff, governance, but being able to put the story out there very clearly such that someone can understand exactly what you're trying to do.
That's very useful. Vanessa, I'm going to go to you, and maybe if you can touch this thesis, but also how, an investor readiness, as you're sitting on the investor side, what do you expect from a founder? And before you answer, I think your camera, I can only see half your face. I don't know if it's me.
Oh, sorry. I was trying to because I have my door open. I was trying to doors open.
Yeah, your face is like this. Okay, it's better now. I think you might have to move it a tiny bit more.
Okay, yeah, just let me know if it's I want to touch upon what Stone mentioned. I think one of the benefits, or quote unquote benefits, when you're pre-seed founder is that you can lean more on the storytelling, right? So the vision, that needs to be really clear. What are you trying to sell in the future? Because all we have is to lean on is what you are telling us to do in the early stages when there's no product or no, really traction out there. So as Stone mentioned, that story and who you're selling into, I think oftentimes we meet founders where they think they know their ICP, but when we probe them on why did you choose this specific customer and can you replicate that same playbook, that's when, the answers become a little bit more unclear there. So really just having clarity around who you're approaching, why you, out of everyone who's building in this space, the team is the one to win. Again, as pre-seed investors, 70% of the conviction is on the team. Whether there's some unique insights that you guys have from previous things you've built, from your research, from just speaking with customers that you have uncovered that you do things differently than other competitors. That's quite important to have clear. But then I would also say, like, we live in a time where building is becoming more democratized with a lot of these AI tools out there. So the threshold that investors have is increasing more and more and more. So whether, last year we would do more pre-seed, now we do more seed, because with everything that's out there, we kind of expect you to have at least something that you can show. Doesn't mean that it needs to be a fully ready product that you're deploying in several markets, but just something that you can start testing with customers to start getting that early validation feedback. So I think that early customer validation is something that investors are more and more looking into. And of course, like, it depends on what industry sector, and some products it takes a longer time to develop before you can have that. But I would say, like, at least as a software investor, that's something that is kind of expected more and more these days.
Okay, I want to summarize in a little bit of a dramatic way. Well, the first part is not so dramatic, which is, as a founder, you need clarity.
Yeah.
As an investor, pre-seed is dead.
I'm gonna say that. I mean, I can't really say that it's dead, but it's harder. Maybe
it is. I can attest to that. I remember when I tried to raise a pre-seed in 2024. As somebody who used to deploy capital, I went to the market expecting investors to give me money because I thought, Borderless, we built it now. Like, I thought it required. Well, we all knew it required funding, but the question I was getting even like 2 years ago was, show us who are the customers, show us the revenue. And it's like, this is a pre-seed. And nobody budged. And I feel like it's only getting, like, there's more expectation from founders because technology is no longer the bottleneck. And like, I can build websites now, right? So as a non-technical founder, I know Stone, maybe you want to touch on, like, you took some time off recently to go build stuff. Can you touch on that?
Yeah, I think around at the beginning of this year, and the AI tools became, so good at building, and we started looking at this as an opportunity, but also as a risk. I truly believe that founders who are not actively using these tools to move much faster, to improve operations internally, are going to kind of be left behind. It's going to become very hard to compete. And so I did pretty much just close. People who know me may know I used to live on X, and I've been off for a few months. And basically, we came in internally looking at our AI posture. What is it that we want to do? How do we want to build? And I've been building a lot of internal tools. So like treasury management, built a tool for that where our operation is very, very complicated. So you wake up in the morning and you have to move money. You're operating across 12 markets, maybe 14 markets now. And you have to move money from one place to another, basically to balance your treasury. And so this was like a manual decision making, and we've kind of built it out now where it's kind of automated. We can see all the money, where it is, which accounts, which partners, where the risk is. And I just built that, with AI. I built something else that is pretty cool. The guys in the office like it, which is basically transactions happening, and we can see them on the screen in real time in the office. Like, you see from Lagos to Palo Alto if they're paying Apple or something. And that's pretty cool and very encouraging to the team to actually see the work you do, helping people. You see businesses actually, paying Meta. So that's also very cool. I did build a lot of internal things. I won't go into each and every one of them. And basically, my whole team is here now. Where not the whole team, but the strategic team is here, and we're doing the same thing. We all flew in from Lagos, from Accra, from Nairobi, and we're here to see how we can use AI to improve our operations, but also to what we can actually sell later. But we are starting with internal improvements.
All right, well, fintech founders who are watching this is your competition. Good luck. Yeah, anyway, Vanessa, I want to come back to you. So a founder sends you a pitch deck. that lands in your inbox. 30 seconds. What are you looking at? What are you paying attention to? And what's grabbing your attention to be like, hey, I need to speak to this founder right now, versus, put in the pipeline. Because it's two things, right? You either put in the pipeline, look at it later, or there's a sense of urgency. They're like, okay, well, I think this one thing made me want to talk to the founder now. What is that one thing? Or is it a couple of things?
Yeah. So in the beginning, when I joined Cornerstone, my responsibility was to screen through the hundreds of website pitches that we get on, weekly, monthly basis. What I actually do first is go on LinkedIn. So I actually don't spend that much time on deck. Like I wanna get a good view of who I'm looking at, like who is the founder, who's the founding team, which is why I mentioned, having that good story around the founding team is quite important as early stage founder investors. So I'd like to look at that first and try to understand, what they've done, have they built before, have they led a function, have they just done something that's quite interesting or out of the norm. And then, looking at the proposition, it's more so around, I don't look for like a specific metric or thing, but more so around the clarity of the deck. Because some people just, spill a lot of words and think that like having a lot of words in the deck is kind of what's gonna be really interesting. But sometimes less is more, and just being really good at, in the first couple of slides, explaining what you do. And if I can follow the logic, that gives me an indication that this is a founder that's good at communicating, good at breaking down complex terms and things into a very simple and digestible manner. So that will make me kind of wanting to know more. Then it's also just like the market potential. Have they explained in a way that, they're building in a period, in a space that is growing, of course, but that they have a unique thesis as to why they think this is the way to move in the market. So I think like that clarity of thought, understanding if there's anything different with the team, and understanding their thesis, where they think the market is moving. And if I find that really appealing, then that would make me want to have a deeper look.
That's interesting. I wouldn't have thought that LinkedIn is the first place you go to. Again, for founders who are not active on LinkedIn, I don't say I recommend it because I'm quite active on LinkedIn, but I think it essentially shapes how investors look at you. Stone.
I think people do it differently, though. That's just kind of what I thought, but maybe some others would look at the deck more in a deep level. And just one thing that I forgot to mention, that I also look at this, but for the previous question of investor readiness, I think also having a good distribution strategy, especially when we're in an age where so much is competing for your attention. And that's why maybe a lot of people have noticed that these days it feels like every founder is having a video for every product launch out there. I think like everyone is just trying to be really good at grabbing like media, grab people's attention. That doesn't mean that you need to be an influencer in any way, but if you have a distribution angle that, at least for me, I haven't seen that much of, that's quite unique, that is probably, I would say, these days becoming more and more important for investors.
Okay, so founders, clarity of thought, and how you sell yourself, and distribution. Yeah. Interesting. Yeah, distribution piece is coming up a bit more. But Stone, I'm going to come back to you on the other side. When you are raising for Eversend back in 2019, 2020, what made investors want to talk to you? Like, what did you have to do to essentially keep on top of the line? Because I know that you've raised like from angels, a lot of fintech CEOs and funds and syndicates, and like, did you devise a strategy for each type of investor? Do you have an approach at all, or how did you go about it?
It's kind of boring, but it kind of goes back to that clarity of thought and clarity of the message. I guess depending on who you're speaking to, if a story can be clear in a way that they understand. So if I'm speaking to an African founder, he will know, things about the markets, and then we'll have that conversation will be very, very different from a conversation I will have with somebody who is based out of Norway or something like or Sweden. Vanessa, I'm not talking about you. I think you do understand Africa. So what we did I think for us, our biggest challenge was that the opportunity was very big, was broad. So, cross-border payments, wallets, cards, FX, crypto, multiple countries, B2C, B2B. It was very, very hard for us to look like we are serious. Otherwise, people start thinking, do you want to do everything? And so we had to turn that complexity into a message that was clear, so that in the very beginning, somebody understands exactly what you're trying to do. I remember we were at Techstars, and we basically came up with a statement which was along the lines of, for Africans and African diaspora who struggle with cross-border payments, we're building an app that can provide just like this is why I love accelerators, and I tell all my founder friends to go into accelerators, because they really, really help you to learn how to tell your story, to bring out the message. So that helped us, and our goal was, if an investor is not able to understand, to repeat what you do in 30 seconds, then that means that things are going to be very difficult. That meeting is going to be very difficult. So we kind of took so much time to get the message out there and to look like we were serious, because it was very easy to look unfocused.
And I really wanted to double click on this focus part. Is it like a feature of the market that you're serving? Because again, I have a decent knowledge of the market, meaning that how you do business in Kenya or how you transact in Kenya is different from how you transact in Nigeria. Can you essentially double click into that? Because I think, I think that would really help.
Yeah, and they're very different markets. I have also very many controversial thoughts around building for these different markets. I said recently on a podcast that Nigerian founders find it very difficult to expand outside of Nigeria because of the whole mobile money, ecosystem is quite different from the banking market structure that is available in Nigeria.
Yeah.
And then you find that East African founders, I digress, but let me say it, Ugandan, Kenyan founders. So I don't know, you see ourselves, you see Nigerian guys will build very big companies in Nigeria or in the UK, but building for Africa is more difficult because of that market understanding. They're understanding the market really deeply. So let me go back to the question. Yes, it is it's because of the way the market is structured that you have to do very many different things. So you want to send money into your platform, you're looking, I think I checked now, because our fancy AI stuff, I know that we have 37 partners. I didn't know, but now the dashboard tells me those who are performing poorly. So imagine 37 integrations, because the person who helps you to collect money in Cameroon is different from the person who helps you deliver money or collect money in Kenya, is different from Uganda, is different from Rwanda. And we had to go into all these countries because we are focused on cross-border, not like everyday banking. In the beginning, we're like super focused on cross-border payments. Because of that, any new market we add basically gives us a massive opportunity to be bigger and bigger. So we had to do the different markets. And our theory was everybody is competing for London to Lagos, London to Nairobi. And we had some research that showed us that a lot of money was moving between African countries. So, Uganda, Kenya, Nigeria, Cameroon, It's crazy the amount of money that moves. And we also got to understand that there's more Africans moving from one African country to another African country than Africans moving from the continent to the rest of the world.
Okay.
So we kind of just focused on Africa at that point, help people move money within Africa. And then we had to build a very, very complicated product. Right now, I actually think one of our moats or one of our advantages is that understanding of the market very deeply, of a very complex market. Money is not enough. You really, really need to understand African payments deeply to operate in the markets where we operate. So it was very difficult. We made big decisions, you know, not to try and raise super fast and grow so fast because it's so difficult. You're going to spend 3 years learning lessons. Fraud patterns in Kenya are different from fraud patterns in Nigeria. It's crazy. Yeah, but we had to do very, very difficult work.
That's very useful. Vanessa, I know you, when I look at Cornerstone and a lot of work that you did in Norway, there is a sort of like focus on diaspora founders, right? You know, I mean, Cornerstone founders are diaspora folks. Like, when you're speaking to us, like, how do you expect us to pitch UK investors versus how do we actually pitch it? Like, do you see a difference when you're speaking to diaspora founders versus UK founders building for the UK, or like, do you expect a different pitch? Don't know if that question makes sense.
Yeah, I think I know what you mean. I mean, we don't necessarily. I think there's some onus on the investors as well to actually do some deep dive and understand the markets as well. So I don't necessarily think that. I mean, yeah, I think like kind of referring to what Stone mentioned, you kind of should know who you're speaking with, like investor wise, to understand if they will understand what you're doing or not. So for us, I mean, in the team, they've invested in founders that were based in Africa previously, like from their angel syndicates and from the angel time. So we already have that context. I don't think there's kind of specific things.
It's 19 hours.
Oh, sorry. That we might be looking for in that way. But if we kind of were to invest in any founder that's building, you know, based like outside of based in Africa and so on, we would probably, in that case, either way co-investing with a local investor just to get more comfortability around kind of the market validation or any kind of validation that we can't do due to like not being in close proximity. So maybe anything around that point would be specific to founders that are, you know, not in the UK. It's like, okay, how do you then prove that, or maybe like say like in a way prove the validation, say it in a way that is credible and sounds credible for an investor that can't do that work when they're not based in Africa, if that makes sense. So I would say that's the only unique thing, but otherwise, if the investor has the context of what you're pitching about, I don't think there's anything different that we would expect.
And Cornerstone has that context, right?
For in certain aspects, but I won't say in all. I mean, we haven't invested in a long time in a company that's based in Africa just because of where we are right now with our LP base. We primarily focus on UK registered companies. But that said, it is an ambition. We want to do more for future funds. So we are starting to kind of build that context and that knowledge internally.
Yeah, and well, the good news is a lot of these diaspora founders are actually like either UK or US registered. So I think, yeah, we're seeing a lot of that. And I'll be like, we're seeing more and more founders are essentially setting up in the UK with benefits and also like a much stronger investor base. But it's good to know like where the focus is. I'm gonna wrap up shortly, but Vanessa, I'm gonna come to you and about relationship building. You definitely say more no than yes because of the share volume. But we know that a no doesn't mean like never. Like, how do you essentially, what sort of advice would you have for founders in terms of relationship building? Because like a founder might be too early, or they don't have the clarity that they need, but like, how do you essentially encourage them to build a relationship with you? Because I'm sure that you've said no to some founders and then said yes later. Any advice for founders?
Yeah, that actually happened with one of our most recent deals. We said no to them when they were raising, I think they were raising their pre-seed, but then we invested now at a much higher valuation. So it worked out better for the founder, I would say, than for us. But, we really, there were some deal dynamics previously that made us not to invest. But the founder has maintained a really close relationship with one of our partners, constantly updating with company updates, right? So for the founders that I might reject at the time, but I still really like, I tell them like, I would still love to stay in touch. If you have any updates you would like to send me, that's a way for me to see, build my conviction over time, as well as to, this is actually a founder who's doing what they said they would do. That's always a good thing to do. And, if you have any events or anything, send that over to the investor. I think sometimes we might overthink networking and relationship building, but just approach it as someone that you would like to be friends with and you like to kind of build a relationship with you. And you build that with having close proximity, like constantly reminding them of you, sending over things. We have founders that refer deals to us that we rejected. And, when they come back and build, we'll have a second look and, we'll invest. So I think just like whenever you have something relevant, send that over to the investor, and vice versa. We still invite founders that we haven't backed into our events just to keep that relationship going, because you never know where that could end up in the future. So I would say like, try to keep the investor updated and don't take it personally if it's not a no, that it might just be certain circumstances at that moment that, made it so that it couldn't work out there and then, but still keep them updated and take it from there.
I want to essentially vouch for Cornerstone because they've invited me to dinners in the past. So yeah, they do organize a lot of good gatherings, and they haven't invested in my company yet. Like I still have, you're on this call right now, and I've maintained a good relationship with Rodney and the team. So yeah, definitely second that. Right. So I'm gonna have one last question, which is, again, we have founders going into ATS on Friday, going to pitch investors. Let me look at my question, which is, if you have one piece of advice to founders who are pitching on Friday, like what's the one thing that you want to advise them as they're stepping in front of these investors? Stone, I'll start with you.
I need to think. I think Vanessa is definitely the best person to answer this, but I think to try and find small ways to show proof that this is a thing, and it's a thing that can become big, even when it's still very, very early. Like Vanessa said, now with all these AI tools, you can build something and you'll be in the market. So I think for founders, it's going to be interesting because it's going to be harder for us to raise money, because people really need proof, and proof that you're serious, proof that you can do what you think you're trying to do. All the things we mentioned today, like going on LinkedIn to check out somebody, is I will know if Stone says he wants to build a payments company. I look at his LinkedIn, I will figure out things very quickly and say, maybe he can actually build it. So all that proof, putting it in that deck, but in a very, very clear, coherent manner, I think just being able to get out your message and show that there is some kind of traction of any kind.
So what I'm hearing is go build some traction in any shape or form.
Yeah.
Okay, right. Maybe I should start a fund called Traction Capital. You know what? Never mind. Vanessa, over to you. Any advice?
Yeah, maybe just to add on, sometimes when I listen to pitching competitions, a lot of people forget to, or kind of, they will spend so much time talking about the product and problem and then kind of skim over themselves and the team, when that's actually one of the most, if not the most important part of the pitch. So really, we talked a lot about, distribution, having unique angles, storytelling, like really nail it down why you are like, why should I give you money out of everyone? Like, okay, we know the problem exists. We know that there are people building variation of the solution, but why you? Why the team? So I think having that really clear, and then, practice your pitch to like a grandma, to a 5-year-old, like just make sure people really understand, what you're saying. And energy, storytelling goes a very long way. So I would say maybe just like, try to be a little bit charming in a way that you can when you pitch as well.
That's very, very, very good advice. And yes, I think energy, charisma goes a very long way. And also being able to pitch it to my grandma, because if my grandma gets it, investors will get it. On that note, Stone, Vanessa, thank you so much for making the time. I appreciate your insights, but it's not over yet, because I'm sure you can see in the comment section that there's already questions pouring through. I hope you don't mind maybe just answering one or two for me, if that's okay. I can start with the first one from Usman Fofana, which is, since many international investors are more naturally drawn to tech because of the scalability, how can founders in operational consumer-facing industry position themselves attractively to those investors, especially when building culturally driven concepts like what I'm trying to do? As someone trying to build and launch the first Afro-inspired restaurant in East Asia. Damn, hi, Usman. Well, who wants to take this one?
Hi, Joe. Thank you.
Oh, sorry. I thought we were going to say something. I mean, yeah. So you mentioned investors there, so I assume maybe I should answer. But yeah, it is really, really hard. I'm not going to lie. We hear a lot about consumer companies, and especially when it's not a tech company. But what I would say is like, try to look at other variations of investors rather than, because venture cap VC investors are not the only type of investor funding you can get. Maybe there are some angels that specifically invest in this. Maybe kind of I would look at who are your closest competitors and what type of capital funding did they get? Like, what type of investors did they get? Like, if there's anything you can look on Crunchbase, any public databases, and literally make a list of the investor funding types that your closest competitors get, and try to create a list from that in that way. Because I do agree, like, if you approach tech VCs, it's going to be really difficult. So I think that goes back to the previous points of trying to really nail down the investors that could be interested in you based on what you've seen them invested in previously. What I would do if I was a consumer brand investor. And I think maybe this don't apply if you're building a restaurant, but what we see a lot with consumer in general is kind of those who are able to build a really strong community around whatever they're building. Their brand often attracts, get any kind of investor interest and so on. And this is from speaking with consumer investors. They really value the brand there, because that goes back to the whole point of how are you different from anyone else building quite similar things. Hopefully that was helpful, but maybe anyone else has any other tips.
Yeah, I want to shamelessly plug one of our products called Raise by Borderless. Essentially, it's what you call a roll-up vehicle that allows you to raise from your friends and family. So if you have folks who want to give you money, you'll be surprised how far small checks can go. So let me, don't know why I can't do this. I'm trying to send it to you, but I don't know. Well, if you go to our website on borderless.com/raise, you can learn more. I think my colleague Bolu's on this call. Happy to take a call with you. Oh, here we go. Bolu has already posted it. So yes, we built a product designed for founders who are not necessarily building tech businesses. You can actually use it to raise across multiple asset classes. Yeah, we'll be more than happy to have a call with you. And I think the next question is, so Mickey has two questions. The first one is, are VCs worried about the macro indicators in Africa currently? Are they confident in African growth story, or are they looking to invest from a moral and affirmative action standpoint? That's the first one.
Maybe I can go again.
I can take it.
Yeah. You can kick off.
So here's my new thesis. My thesis is every investor wants to make money, right? And if you show them where the money is, they'll come. And like we've seen a lot of companies in Africa and a lot of funds in Africa that have actually made money. So I think I'm not saying that, well, VCs do not invest from an affirmative action or moral standpoint, because VCs have the responsibility to return capital to their investors, which are the LPs, and anything that's not returning capital, they are not interested in. Vanessa, correct me if I'm wrong about the VC math, which is they expect one investment to return the entire fund. And I feel like a lot of founders don't actually understand these dynamics. And as far as I know, I don't know any fund in Africa, any commercial fund in Africa that's investing from an affirmative action standpoint. Because ultimately, they have to return money to the investors. It's just like anybody trying to make money. So, I mean, you see, like, DFIs and folks who are doing charity, giving grants, it's not the same. Commercial funds are there to make money, and many of them believe that they can actually find an alpha in Africa. So that's my thesis, and that's my experience with African fund investors. But Stone, or maybe Vanessa, if you want to add.
Yeah, no, I think you covered it. If we were in the business of investing for charity purposes, we would be out. So that's definitely not it. I mean, I think, with a lot of different markets, even here, there's worries about exits, how, at what point we'll be able to get our money, the returns back. And from speaking with African-focused VCs, that has been, a thing around the exit market and so on has been difficult. But I'm sure kind of more African-focused VC would provide more context on that. So I will say maybe that's kind of specific, but we've also experienced that that's been difficult on our side as well here. So
yeah, Stone.
Yeah, maybe I'll tackle the other part, I think, which we haven't tackled, which is the macro side. I think investors would definitely be worried about macro, but I think that does not mean that they're bearish. So that basically gets built into the risk when you look at companies, and yeah, but definitely people are always looking at the risk, like currency risk. I remember at some point when we were fundraising, many companies were fundraising, and we had, when the Naira was, depreciating, people are looking at these things. I remember at some point we doubled revenue, but the reports showed like it fell by 20% in dollar terms because of the flip of the Naira, Ghana, and Kenya shillings at the same time.
Oh yeah, Jesus.
Yeah.
Wow.
Yeah, so people are looking at these things, but I think at the end of the day, they underwrite that and it's fine. You can still make money in Africa. I'm actually very bullish myself.
Same, very, very bullish. And then the last question, which I actually answered because I'm very conscious of time, which is how big are diaspora angel syndicates? Is there an opportunity or interest from such investors? How best should founders tap into this niche? Well, Mickey, you're at the right place because we've built technology for diaspora angel syndicates. At the moment, we have 21 of them on Borderless. And yeah, we'll be more than happy to share more with you. That's literally what we do. So you are in the right forum. Folks, this has been fantastic. Any last parting words?
I just wanted to mention that I actually think, like what Osman is trying to do, VC might not be the right funding type, but I think, that kind of crowdfunding or even raised by Borderless, where you just get a community together. I mean, we like to eat together. I would be happy to put my money together with other Africans to build an African restaurant so I think that's a very easy way to get money in.
I like the eating together part. Thank you so much.
Thank you. So sorry if I can just jump in very quickly, and I'm very aware of time. My apologies, and greetings all from Seoul. So yeah, Stone, actually I am living in Seoul. I've been in East Asia for approximately 6 years. Spent time also in Japan. So I know this area very well. And actually, when I came here, it was to open up a bakery, a French style bakery, which, did pretty well for itself. However, there's definitely a lack of diversity when it comes to especially chicken. And having grown up originally from Mali and being raised in Cote d'Ivoire, knowing like the poulet braisé and kind of like the chicken style that you have in the UK, Nando's peri peri, that's actually something that I look at their model and study very well, and seeing how successful they are. I know it's just a matter of time until something like that takes place in Seoul. But particularly, given how international Seoul is and how open they are now to foreigners and how people are visiting, it's definitely something that, I've been working on. And I would love to get your email, and perhaps, we can have this conversation onwards, and I can, share with you my pitch deck and everything else that I'm working on.
Yeah, Osman, just shoot me a LinkedIn and I'll share with you.
Sounds good. Will do. Thank you, Stone.
All right, fantastic. Thank you, Osman. Yeah, on that note, Stone, Vanessa, thank you so much. I believe if you don't mind staying on to essentially have a look at the pitches for us, would that be okay? And hopefully give some point of feedback to the founders for us. Is that okay?
Yeah.
Fantastic. All right. This is my cue to leave you because I actually had to go, but you're in very good hands. Timmy is going to take over to essentially take over the pitch. Before I go, Stone, you're in Uganda right now, but if you happen to come back to the UK before the end of next week, we're hosting 2 events that my team will talk about. We're hosting an event on Friday, which is our first ever professional event. It's called UK Innovation Bridge. And then the second one, I think, Vanessa, you were there last year, where we hosted one of the biggest parties in London. And it's happening again on the Saturday the 6th. So if you happen to be in town, we'd love to invite you, and the team will share the links with you. So thank you so much for giving us your time. I'm very, very grateful for it. And yeah, I look forward to seeing you both soon.
Awesome.
Yes, thanks, Joe.
Thank you. All right, Timmy, over to you.
Yep. Thank you, Joe. Hi, everyone. Hi, Vanessa. Hi, Stone. Thank you so much for that wonderful conversation. I think we will start with the first founder. Yes, okay, please, can you put up the slide? We're starting with Chiron. All right, so Chiron, please, in 5 minutes, tell us about your startup, and Stone and Vanessa would then give feedback on what they think. Okay, over to you.
Hey, thank you. How's everyone? Can you see my screen?
Yeah.
All right, brilliant. So I'm Kyron, the CEO and co-founder of Zynta. We're building regulated stablecoin infrastructure with a key focus on Africa. So Africa's got many problems, some of them being a number of different regulators. I'm sure everybody here has probably tried to process a big payment into or intra-Africa and experienced issues, significant delays with payments, settlement delays and transaction costs with some of the larger size transactions, and generally a lack of clear compliance across the board. Market opportunity is huge, with over $2 trillion in annual cross-border trade from a B2B perspective, $150 billion in annual remittances from a B2C perspective, and anticipated that there'll be 500 million fintech users by 2030. We're really bullish on Africa's stablecoin decade beginning. So our solution is regulated stablecoin APIs for Africa. We've essentially built a suite of APIs that any business, bank, payment service provider can integrate into their service to send payouts compliantly via one programmable layer across Africa. So how does it work? A partner PSP can deposit USDC, USDT, EURC, or other stablecoins. We route via our licensed corridors, and we either pay out directly to wallet or via one of our settlement partners across a number of countries, with all of the AML, KYC, and compliance handled natively. So why are we great? From a regulatory standpoint, we have a number of licenses. We have an EU VAS. We also have a Canadian MSB, which isn't on here, but we just acquired it recently. We're actually in the new VAS piloting program in Nigeria with the NRS and the CBN. And then separately, we're in a number of different processes for licenses across Ghana, Guinea, Sierra Leone, Senegal, Liberia, and Zambia were actually in the sandbox as well. We kind of think of ourselves as like the bridge for Africa. So essentially providing APIs from local currency into stablecoins. And how we're doing this, the regulatory side, we've introduced the AVAF, which is the African Virtual Assets Forum, which is bringing together regulatory clarity and innovation across the African digital space, pulling together a number of ministers of finance, central banks, and issuers, all into one forum to drive stablecoin adoption across the continent, which has also been backed by MoonPay, Solana Policy Institute, and a few other providers as well. To date, using our APIs on our core platform, we've actually processed over $250 million in transaction volume, generating over $1.4 million in revenue. We have over 150 clients that we've onboarded, and we're live in 6 corridors now. Actually, this is incorrect. Expecting to be live by 10 corridors by the end of June. And in terms of, some of our partners who are actually part of the Visa Africa FinTech Accelerate program, and we have some LOIs with some of Africa's largest banks as well for mortgage solutions. Business model is pretty straightforward. So we take a fee that's embedded for each API payment. And from an FX perspective as well, we have a small margin on each stablecoin fiat conversion. We're rolling out a compliance as a service framework as well, where essentially non-regulated partners can use our infrastructure to facilitate regulated payments. So the vision is to actually build Africa's stablecoin future. So like I said, we have 6 licensed corridors live now and expecting 15 by the end of the quarter. Also working on a Pan-African stablecoin clearing system as well by the end of the year, and actually envision that within 5 years, every African business will settle globally or locally in stablecoins. So our team is myself, my co-founder, Kola, and our CTO, Dimitri. Dimitri's already had 2 exits and actually 1 Coliseum. And then our advisors are Shiv Shrivastava, who was the MoonPay Ventures lead, and Kemi Adeosun, who's the ex-Minister of Finance of Nigeria and also was the chairman of Afri-Exim Bank. We're actually close to finalizing our pre-seed round, which is $3 million. We have around 20% left of the allocation, but it's been led by Portal Ventures with participation from Solana, Oros, Lava, and a few notable angels from the ecosystem, including the co-founder of Jelly, Nom from Bonk, and a few others. If you want to reach out to me, you can either email me at kai@zynta.com or you can scan the QR code. Thank you.
Thank you so much, Kyron. Right on time. Thank you. Okay, I think we can start with you, Stone. What do you think?
You're muted.
Mic is muted.
Yeah, I was saying this is what I believe in. So I agree with Kyron a lot on almost everything that he said. If I was an investor, this would be very interesting to me. We're basically building the same APIs as Kyron is, and we believe in the opportunity. So I'm trying to look for a piece of advice. Maybe one big question that we usually get is around liquidity, because I think that's one of the challenges. I see you're tackling compliance, and when you tackle compliance, it usually actually also solves the liquidity problem. But I guess that would be the main question of how you're going to make sure you have liquidity across all these corridors.
Yeah, great question. So kind of 2 regions. I think regulatory first enables you to do a number of different things, right? It enables you to partner with banks first and foremost. So we actually have, some very strong banks that we partner with, not just across Africa, but also across like Europe as well. And that way we're able to tap into like some of their liquidity for local to USD based transactions, but then also we're able to, kind of partner with other liquidity providers like on the network. Secondly, we've joined a couple of interesting networks as well. We actually got a grant from Circle. So we actually have been able to tap into their liquidity network, and we've been doing a lot of work more recently with Tether. Our lead is actually backed a couple of, Tether investments as well. So we're doing a lot of marketing with them to open up new markets and corridors. So that's how I think we tackle the liquidity problem, right? Regulatory first is very important because, you know, essentially we're moving more towards the TradFi space within like crypto. I think it's been very heavily unregulated for, you know, a number of years. And more recently, it's kind of converging. So, you know, a lot of the crypto-based companies are looking for like banking licenses, and we're actually acquiring a banking license ourselves. And a lot of the, you know, TradFi-based companies are interested or looking at how to partner with different stablecoin-based companies. So we're actually getting a lot of partnerships out of that as well. So I think that's how we tackle the liquidity problem. Yeah, I think that answers your question.
Yeah.
Okay, Vanessa. Any questions for carry on?
You're on mute, Vanessa.
You're muted.
How you doing now?
Sorry, my computer is lagging really bad. No, hi, Karen. We've spoken before. I think your pitch is really great. I don't think I have anything really to say on the pitch side. Maybe like on the last bit regarding the 3 million, you did touch upon kind of your longer term goals, but it would be good to kind of break it down, maybe a shorter term where you're going to spend the 3 million on. But I think like pitch wise, it was really, really great. One question I had kind of regarding the local partners seems to be quite integral to the proposition as well, would be great. I guess like one thing I would ask is kind of what made them want to partner with you, you know, kind of how did you build that trust with the partners that you acquired, the banks and so on. And I guess like more on the go-to-market piece, more for the company side, you mentioned kind of the initiative that you guys will have with the partners, but I guess like how do you think about actually reaching businesses, building trust amongst them and so on, probably would be the questions. But I thought the pitch itself was really good.
Yeah, thank you. Great to see you again. I think you know, when you look at investable companies, right, there's generally VCs look at like a couple of things. There's first, like, what is your moat, and like how do you essentially have an unfair advantage and kind of separate yourselves from a lot of the other companies that may be building in the space. And I think there's only two real moats that are available left, like within payments. First and foremost is like regulatory piece, and we're like aggressively targeting that and going towards that. And I'm literally picking up licenses like very, very regularly. We're very close to getting our Senegalese and Liberia license. You know, those are smaller markets in Nigeria, but you know, we're able to dominate those markets. And secondly, the other like real moat that we have is like relationships, right? Which generally ties into distribution as well. So we're pretty much like leveraging a lot of our, you know, unfair advantages that we have in terms of like, you know, regulatory people, whether those are people that have either previously been in government, people that have like prominent positions in each of the different countries, and really tapping into them for some of our early clients that we were able to leverage with having like, I guess, our European license. But separately, you know, having the more localized based licenses essentially enables us to drive a lot more value to the more enterprise based companies, right? Because, you know, in this payment space, you go for one of like two key categories. Either you go for like the SMEs that don't really care if you're regulated, or you go for like the large side enterprises, regulated companies, government contracts, where you actually need to be like regulated in those regions. So that's kind of like our go-to market. And then separately, we were the first Africa-focused company to be backed by Solana Labs ever. So, you know, we were in the Solana incubator, and being in that, firstly, we were able to, you know, work with a lot of, you know, the Solana Labs team. But then secondly, what's come out of the back of that is we have a lot of ecosystem, you know, projects that we are actually doing integrations with now. So, you know, they do a lot of, contrary to popular belief, they actually do a lot of volume. And we're super excited at being able to, you know, kind of provide our services to like those guys as being, for me, in my opinion, like part of the best like crypto-based network globally right now.
Awesome.
All right. Thank you so much, Stone and Vanessa. Thank you, Kyron. So we'll move to the next founder. I think that should be Kenneth Papia. Okay. So Kenneth, you have 5
Hi, can you hear
minutes.
me?
Yes, we can.
Okay.
All right. So your time starts now.
Can you see my screen in any way?
No, not yet. Borderless, we can take down the slide.
Can you see my screen?
No, I can't.
Okay. Can you see it?
Okay, I think it's coming up here. Okay, it's up now.
All right. My name is Kenneth Babia. I'm the CEO for Orbit Electric. So basically, Orbit Electric, we're a made in Nigeria electric vehicle manufacturing company. Basically, we focus on manufacturing electric motorcycles here in Lagos, Nigeria. So I'm going to introduce my team. My name is Kenneth. I'm the founder, CEO of Orbit Electric. I've built lots of other startups from logistics to food to fintech delivery. And my co-founder, he's ex-KPMG. He's good, very good in finance and accounting. And my head of engineering, he's very good in automobile designs and development. He worked with Peugeot Nigeria, 7 years experience. So basically, at a point, Orbit Electric, we saw that there was a problem as regards fuel in Nigeria 2023 because we were running our own delivery service. So we found out that from our experience, we found out that the riders cannot save in the sense that riders couldn't take home anything because they were, buying expensive fuel, they were paying their repayment for their bikes, and also they couldn't save, right? And they know that electric is quite, a cheaper option, but the problem is that they couldn't afford electric motorcycles. So our solution, basically, now we actually get to assemble these electric motorcycles here in Lagos, Nigeria, and we assemble our own batteries. Doing a research with Siemens Tipstone, we saw that local assembly can actually reduce the cost of the vehicle by 41%. And also, so we deployed our own proprietary chargers in charging points of Lagos, where we found out that this reduced 70% of the cost savings for the riders. I'll just go over it. So basically, our revenue streams is very simple. Our primary revenue streams come from sales of bike, but we found out that 90% of the riders that walk through the door actually want a higher purchase. So we develop a plan for them to actually have higher purchase, and also still partner with asset financing companies to be able to offer them asset financing services. Also, so we do the battery charge subscriptions where riders get to pay for a charge, or riders to pay monthly fees for an amount of charge. We also sell to data to fleet management companies to be able to monitor where their vehicles are, battery health, and be able to make decisions from that. Also, still, we have deployed 52 electric motorcycles. We have done over 2,500 charge sessions, and also we have done $92,000 plus recurring revenue, right? And we have a riders waiting list of about 1,300 riders, where 25% were referrals. So basically, our next stage that we want to raise $1.2 million on a 50% equity and debt, where we want to deploy 500 electric motorcycles, deploy 100 charge points, and also expand our factory. Looking at 18 months after post-fund, we know we're going to deploy 1,000 units, 150 charge points, $30,000 recurring revenue, and also expand to 3 more cities. Thank you very much.
All right, thank you so much, Kenneth. So Vanessa, should we start with you?
Yeah, sure. Thank you, Kenneth. Oh, sorry. Can you hear me?
Yes.
Yeah, I hear you.
Yeah. No, thank you, Kenneth. Really, really interesting proposition. I think my questions would be firstly around kind of the unit economics. Is something I will probe into, especially understanding, profitability. I could imagine it's quite expensive. It has a high cost of manufacturing or, buying vehicles for this. So that's kind of what things that I would dig into. I don't know if you want to take that first before I go on.
Okay, so basically, when we started our venture, our business, we started with completely built units, right? Then we saw that it was quite expensive for the target market, so we had to now start assembling. Assembling gives us import duty exemptions in Nigeria, so we get to slash 30% of the import duties. So that makes it a little bit cheaper. And also still, we use 30% locally made components, which makes it also cheaper. So from standpoint based on unit economics, we saw that once we can be able to assemble our vehicles, we get to reduce the cost of the vehicles by about 41%.
Okay, thank you. I guess like two of the other questions I've had is, you know, you have other players like Move.io, who's been trying, and I guess like understanding how you guys are approaching this differently than anyone else who's tried in the market. And also just like understanding the infrastructure that enables more and more people to use EV, because there are certain areas where we see, you know, people are using EV electric vehicles more because there are charging points available and kind of the infrastructure has allowed it that to be. I guess like that's the things that I will try to understand more of, you know, in the places that you launched. Is it actually realistic for people to be using EV there?
Yeah, so let me start with Move. Move is basically asset financing. Move, it's not in assembly or manufacturing. They don't manufacture vehicles. We are actually manufacturing our vehicles in Nigeria, which sets us apart. We're like the second player, right, that actually manufactures electric motorcycles in Nigeria, right? As regards charging infrastructure, we've actually studied rider behavior and be able to get data as regards how the riders behave and be able to deploy charging infrastructures at public places that generate their own power, in the sense that like restaurants, malls, they generate their own power. So there's basically no downtime as regards this, right? So we know that, yeah, charging was a problem, and other players actually use swap technologies, but we see that riders prefer to charge than to swap. So in our environment, I think that a lot of riders know that electric is going to reduce their cost of operations, and they rather want to go for an electric than actually buy a fuel bike.
Okay, thank you.
Thank you, Vanessa. Stone, do you have any questions or comments?
No, nothing to add. Just I like the it's impressive what you're trying to do. So just go big.
Yeah, thanks so much. And I use Eversend a lot.
Ah, my man.
That's great.
Anyway, thank you very much, guys.
Thank you, Kenneth. Thank you. All right, we'll have the last founder now, Sydney Sam. Okay, he's here.
All right. Hey, everyone. So I will.
You have your slides.
Okay. I have my slides up, but I think your slide is taking up the screen for now. Yeah.
Okay. We'll take it down now. All right.
Awesome. Hi, everyone. So if you run a business, you need revenue. To make revenue, you need marketing, and modern marketing demands creative capacity. But decades ago, the Global West realized that world-class creative talent doesn't only live in expensive cities. Building a $500 billion outsourcing industry across India, Eastern Europe, and Southeast Asia. Today, Africa is next, and yet right now, global brands are producing less content than they need, slower than market demands, and paying far more than they should. Agencies are still slow and expensive, freelancers create management chaos, and networks like Upwork lack continuity, while AI solves volume, but completely loses brand intelligence, as no one or nobody has unified these pieces into a single operating model. Workspace is the creative operating system for modern marketing, built for global marketing teams that need to produce faster and at scale without building bloated internal teams. Our platform combines AI-powered workflows, human strategic intelligence, and a distributed network of Africa's top designers, marketers, and web builders. You plug in and we produce. High-growth enterprises get an entire creative department instantly on a predictable monthly subscription like Netflix, unlocking immense marketing capacity at a click of a button. The engine is already proven. We're already at $100,000 in recurring revenue and have supported over 700 teams on 5,000 projects across 20 countries. And to accelerate our entry into our focus areas, which are the UK and US, We are raising a pre-seed of $100,000, the majority of which has already been committed. This final capital injection will scale our acquisition of high-value subscribers, just about 200 of them, to take us to $1 million in annual recurring revenue within 24 months. We're executing a roadmap built on a platform and production system that is already highly profitable at 70% margins. We're led by a leadership team that is ex-Amazon, ex-Microsoft, and I am personally a 3-time founder, recognized on Forbes for a decade-long set of work in venture and Africa's creative economy. And we also recently completed the Orange Corners Accelerator. Africa has 5 million digital creatives, extraordinary talent seeking ethical, consistent income, and they're structurally disconnected and invisible to the global outsourcing market that need it the most. So let's scale this access point together. My email is ceo@workspaceglobal.com. Thank you so much.
Thank you. Thank you. That was right on time. The room got a bit hotter. Okay. All right. Stone, do you want to take this?
Yeah. Hi, Sydney.
Hey.
This is interesting. I'm just not from an investor angle, more like from a customer angle is where I'm coming from. I'm super interested in seeing the work that
the workflow.
That would be interesting. So maybe you can hit me up and I'll get someone from my team to try it out.
You can actually try it for free for 1 week. So I will hook you up.
Fantastic.
Yeah.
Great. I will let the investor ask the investment questions.
Okay.
Thank you for that. No, Cindy, I will first of all say great pitch. I really like your pace and the energy you brought in. So, and also, the email where we can find you after, I think that was a good plug. I guess like my big questions will be a little bit around differentiation, trying to understand, because, I've come across a few marketing operating systems. So just trying to understand how you approach things differently, and maybe also take it through the context of, you have 700 brands there, you have around 100K in revenue. From that insight you have of working with the brands, what has been the key winning feature or the thing with your platform that, from feedback, you believe sets your platform apart from anything else that they've tried?
All right, brilliant. So our general approach was we were trying to figure out how to turn creative capacity into something that people could access instantly, like Uber. And we realized that a lot of the friction points actually have to do with people putting their thoughts down on paper and being able to communicate with somebody who would give it back to them without a lot of back and forth. Right. And that's one of the major things that we have dealt with. And that's why we're not a freelance marketplace, which is connecting one person to one freelancer where they're working on one project. We're a marketing capacity company where you get repeated requests over and over again because brands need to put out so much more work. So that's the differentiator. So a lot of people are looking to outsource to agencies, but they can't afford agencies. Freelancers are too small. AI requires you to be a technical person. And if you don't have brand intelligence, the AI is not going to do that for you. So there's still the outsourcing market for creative is actually growing, more recently instead of shrinking, because people are looking for a lot more strategic intelligence and insight. And us pairing that with the capacity that we can literally 100 people can work for you at a go for as little as $500 a month. Actually, we even have a lower package, which is about $300 a month. For an American company or a UK company, it's a bit of a steal. And we're paying Africans very ethically as well, to be able to do this. So that's kind of the way we're approaching this whole thing, powering the whole system with an AI workflow that most people haven't spent time to build from the customer perspective. They just think about matching the talent, but they don't think about how does the customer put their thoughts down, how do you interpret that, quality control, all of those things, selecting the right person, cultural nuance. We figured all of that out in our platform. So that's the difference. Yeah.
Okay, got it. Thank you.
Welcome. Awesome.
Okay. Vanessa, do you have any other question?
I I guess like what is your end vision, your end goal? If you're looking 5-10 years down the line, what do you hope to achieve?
Right. So HubSpot transformed growth marketing, Salesforce transformed sales. We are trying to transform the creative outsourcing market because it's still a gap in the world that hasn't been sorted out. Our competitors, Superside, are doing this, but they are dealing with enterprise customers starting from $5,000 and above, and they're making over $600 million a year. But the small business market, nobody's tackling that. And we have the Africa piece that allows the cost to be much more competitive globally. And that's what we're trying to create. So we're hoping 100,000 subscribers, hopefully within 5 years, that kind of scale, because the platform can do that kind of work. Yeah.
Awesome. Love that.
Cool.
Okay, thank you so much, Vanessa and Stone, for spending this time with us. We sincerely appreciate it. Sorry, my camera is off. My network is a bit choppy. I live in Nigeria. Sorry. And thank you to the founders, Sydney, Chiron, and Kenneth. Thank you so much. We wish you all the best at the investment showcase at ATS. So we'll just take the updates now. Team Borderless. Okay, I think we have somebody from the ATS team here. Isabella, please let's know if you're here.
Hello.
Hi. Okay. So please talk to us about ATS.
All right, sorry, I won't have my camera on. It's a little bit late on my end, so it's
fine.
chaotic in my house. So just a quick update about Africa Tech Summit. So Africa Tech Summit is more like, I'm pretty sure most of you know about it. It's a B2B event whereby we are able to bring together everyone in the tech ecosystem. So this time round for London, it's going to be our 10th edition, which means it's going to be our 10th year in London. So it's going to be our 10th anniversary. So it's more of, trying to get the African tech also outside in Europe, trying to get you investors and networking. And then we are hopeful that we'll have you next year for our Nairobi event. And yes, so that's just a nutshell about Africa Tech Summit. I'm not sure if there's anything else or a question.
No, nothing else. Thank you so much, Isabel. Borderless team, please can you put the slide back up? Sorry, the message was a mistake. Thank you. Okay, so if you haven't registered for ATS, you can do that at www.africatechsummit.com/London and use the discount code HoaQ20 to get 20% off, just the same way we typed it here, capital letter H and Q, right? Exactly like this, and you get 20% off to attend the event. Next slide, please. Okay, thank you. So this event is brought to you by ATS, HoaQ, and Raised by Borderless. So HoaQ is a community of creators and operators backing entrepreneurs in building scalable businesses for Africa and its diaspora. And HoaQ has a couple of events coming up very soon. This week, they're hosting the monthly AMA session, and it's going to be on building African tech infrastructure talent, operations, and execution. So if you're here, you're a founder, you're an operator, you're an investor, you should definitely be a part of this session because we're going to have Ire Aderinoku, who is an investor. We're also going to have Malik, who is the CEO of StartButton, Ashley Manuel, who is the COO of Semicolon. If you haven't registered, you can register with the link there. We're going to send you an email after this with all of these links, don't worry. And then while you're still in London for ATS, please don't leave yet. HoaQ is also hosting 2 other events as well. There's the Africa UK Innovation Bridge, where founders, investors, and operators will get to have important conversations on how the UK and Africa can have much more impact on the continent. It's happening on Friday, the 5th in London. And then we also have a party, the Startup Ecosystem Party. It's in partnership with Wimbats. If you know HoaQ, you know that they host the best parties and you don't want to miss this. So good vibes, food, music, and great conversations for founders, for builders, investors, and operators. Next slide, please. And finally, Raised by Borderless. So Raised by Borderless is a product of Borderless and is basically created for early stage founders who want to raise from their community. Most times when founders are raising, they're thinking of reaching out to a VC, right? But how about if you raise from people who already believe in you, or maybe from your family, right? So we help you to do that in a structured way. We help you with onboarding investors, receiving funds from investors from all over the world, cross-border payments and all of that. And also we help you set up your data room such that it's clean, it's organized, and even prepares you for bigger rounds in the future. So if you're interested in this, please send us an email, hello@onborderless.com, or you can go to www.onborderless.com/raise. There is a link there for you to fill the onboarding form, and we look forward to hearing from you. Next slide. Thank you so much for spending this time with us. Please, if you haven't registered for ATS, please do that. The link is here, and you can use the discount code to get 20% off. Enjoy the rest of your evening. Thank you.
Thank you. Bye.
Bye. Thank you. Bye.